So, hello and welcome to another edition of Beyond the Blueprint podcast. I'm your host, Jeff O'Donnell, and joined with me today is Tawan Davis, founding partner and CEO of the Steinbridge Group. Thanks for being with us today, Tawan. How are you?
Sure. Yeah, good. Thanks. How are you?
I'm doing well, thanks.
Good.
So, let's kick it off. Could you tell us a bit about your role at Steinbridge Group and how you got started in the real estate business?
Sure. I lead the Steinbridge Group. I founded the company and lead the team, and we do real estate investment and development in around the country. I started the company about 10 years ago now. We started by buying office buildings, and we bought several $100 million worth of office buildings, stabilized office buildings in the northeastern United States. And then we made the transition to the residential space under the conviction that the long-term opportunity for real estate is in residential. There is a perennial need for housing in the United States. We are underhoused by at least a generation and a half, possibly 2 to 4 generations. And so that is where the long-term need is, and we thought that that the growth opportunity for a juggernaut company like ours was really
Mhm.
in the residential space. And so we really pivoted away from office investing in about 2019, which was great for us because that was prior to the impact that COVID had on the office space,
Right, right.
and got into the residential development space. And so that's really what we've been doing for the last several years. We started uh, in residential rehabs, buying and rehabbing individual homes and small buildings. We did, tens of millions of dollars of that, and then we transitioned into ground-up developments, which we now do around the United States, and we have developments in process in probably 5 or 6 states in the United States: Florida, Texas, Georgia, um, Virginia, Philadelphia, and we're looking at other parts of the country as well.
Wow, very nice. That's impressive. So now looking at the broader industry, what are some of the biggest shifts or trends you're currently observing in the real estate market?
Sure, I think that the biggest challenge, if I can start there, in the real estate space today is uncertainty. And I think
Mhm.
that the uncertainty in a few areas. One is the uncertainty in the interest rates and the constant, will they raise? Won't they raise? Will they
Right.
hold? Won't they hold? Will the Fed steady itself, or will it decrease rates? Will the administration have more influence over interest rates by more control over the Federal Reserve? That uncertainty, I think, is a large impact on real estate investment and real estate development. For several reasons. From the investor perspective, real estate is viewed as a premium asset over treasuries, and so pricing real estate returns when there is so much uncertainty in the underlying real estate in the underlying interest rates
Mhm.
is challenging. What kind of premium do you need for real estate, for real estate investing, for real estate development when the underlying base return is uncertain? So it makes pricing investor risk harder. The second is that it makes borrowing harder. Of course, it drives up the cost of borrowing on the lender side, and so interest rates on borrowing for construction, borrowing for acquisition, borrowing for redevelopment is harder. The unfortunate result of that is that it means that there is less housing being produced at any given point in time, even though there is an acute need for the housing in the American middle class in particular. And so the uncertainty that creates challenging investment environments, both in debt and equity, make it harder to kind of produce large quantities of homes for those of us who provide that service to the American economy.
Right. Oh, wow. Yeah, that's really insightful. So you mentioned the interest rates. How has that directly impacted your business?
Well, it's interesting. I think one of the first impacts that we saw in on the interest rates was when we began a program with to sell completed homes to potential first-time home buyers. So when we did a large um, program of redeveloping homes in Pennsylvania, and we redeveloped, scores and scores of houses and began to sell those homes to individual home buyers. We initiated a partnership with PNC Bank that they would provide mortgages for those potential home buyers to get them
Oh,
on the
wow.
path to home ownership. What we
Okay.
found is that the homeowners would qualify, or potential homeowners would qualify for a loan from PNC. And in the 2 or 3 months of going through the qualification process, going through the first time homebuyer program, interest rates would increase and they would no longer be qualified for that exact same home for which they had
Oh,
been
wow.
pre-qualified before. And that
Right.
made it very hard to encourage that group of first-time owners to purchase homes, because every time they thought they were in through the process, the ball would move away from them. And so that was one of the most challenging parts of our experience with interest rates.
Right. Yeah, no, that sounds like managing those financial variables can be a real headache. So beyond that, what's currently working really well for Steinbridge Group?
Well, I think that one of there are a few things that are working well. One of the wonderful things that we're finding is there are very positive opportunities in the underlying real estate markets themselves. There is a dislocation in the underlying real estate markets that I think our business strategy did a good job of closing. Um, and our strategy basically is to partner with nonprofits, with community organizations, with large property owners that own well-positioned real estate that's being underutilized, and helping them to catalyze that real estate into an economically productive use. That is our basic strategy, and we find that the dislocation in that market, the imperfect information, the fact that that is a somewhat disorganized market, provides
Right.
tremendous opportunities for us to partner with folks who have real estate, want to activate it, want to do something with it, but don't know how, and
Right.
for investors and lenders that are looking for opportunities for good investment, for higher returns, but the real estate prices that they're seeing in the more competitive brokered spaces are too high. And so we are able to build the bridge between the real estate opportunity and the capital market trying to find the opportunity to invest. And then we have the expertise to structure and develop those deals. And so we are seeing that that is a very positive trend in our particular business.
Wow, that's awesome. And what areas are you finding most frustrating?
Well, I think there are a few things. Certainly, the equity capital markets froze for much of 2024 and 2025 because of what I discussed earlier, the challenge in pricing real estate risk, and particularly real estate development risk. That was a challenge. I think that the uncertainty again in interest rates has been a meaningful challenge, and I discussed that in detail. And then trying to perfect the exit on these developments, on these investments. Are we going to refinance and hold? Is that the ideal and optimal business plan? Are we going to sell? And who are those potential buyers? Are they investor buyers? Are they more strategic buyers? And so that I think is part of what we have to figure out is, as we go through the development process, what is the ideal exit strategy to maximize value, both for our selves, our investors, but also for the underlying real estate.
Well, that's very interesting. Um, Now, if you had here's kind of a fun question. If you had a magic wand and could fix just one thing in your business that's holding you back or slowing you down, what might that one thing be?
It's a great question. Um, if I could fix one thing in our business, I think I would shorten the development timeline. I would shorten the development timeline. That is something over which we don't have complete and absolute control. Some of these properties we have had owned or had site control over for a year or two before we can actually get into the ground. Some
Mm,
of that is, the process of identifying the property, closing on the asset, well, getting site control, and then actually going through all of the due diligence and then closing, and then doing all of the pre-development, the design, the civil engineering, the architecture, all of those early stages, and then taking that production and taking that through the public approvals process, which can take anywhere from 6 months to a year and a half, depending on the municipality, and the comments that the public sector may have on your project. And then if you need some kind of uh, public approval, either at the staffing level for city planning or at the commission level for the planning commission or at the city council level. On all of our deals, we have some level of approval, usually at least staffing and commission, but often we have to go through the city planning staff and then through the planning commission. And then we often have to get a ordinance voted on by city council itself, depending on which of our projects and in which city. And that process is extremely time consuming, it is expensive, and it's quasi political as well. If we
right.
could shorten that process, that would be the one thing I think that would speed up our production of residential units, help us provide the impact both to the community institutions that are looking to activate these assets and to the residents who are looking for homes to live in when there are in areas and municipalities that have a shortage.
Right. So I guess on average, what is the average timeline that you're seeing typically?
Oh gosh. Well, let's see. It probably takes 18 months to get a project ready for production. That is a realistic timeline. And any real estate developer who tells you that it's shorter than that, from the time they have site control to the time they get into the ground, is probably being untruthful. Now, it is possible that it is a 12-month process. If you have all of your zoning already, if you have a design and specs that you have used before, if you have a core team that you have used in the past, then you can probably shorten that to 12 months. Also,
Right.
if you are building urban infill and don't have to do any horizontal work, horizontal or infrastructure work, you can certainly shorten that planning period to maybe 12 months. But
Mhm.
as a rule of thumb, it is an 18-month process, particularly if you're building something of size that requires some public input, approval, and comment. Now, and that 18 months is I would say, the simple project. If you're building something that is mixed use or that has environmental issues or that is in a complex urban center, that is 24 to 30 months to be realistic.
Wow.
And so it is the planning process itself is the design process. Well, the acquisition process is its own process, and then the kind of the design process after you acquire, and then the pre-development, and then the planning process. That's at least 18 months realistically for any real estate development in the United States, and that is one that is fast-tracked. It can easily be a 30-month process if you're building something large or complicated.
Wow. That is quite a long time. Um, so looking ahead, where do you envision Steinbridge Group being in the next 6 to 12 months?
Well, my hope for the company is that in the next 6 to 12 months, we'll have somewhere between 500 to 1,000 units under active development in about, probably 3, 4 states, and another, you know, uh, I would say in the next 6 to 12 months, we should have closer to 1,500 to 2,000 homes under different stages of construction or development, and a pipeline of another 1,500 to 2,000. That's about where we are. Uh,
Right.
of that 1,500 to 2,000, probably 1,000 to 1,500 will be under active development coming out of the ground, and the others will be in the pre-development or development stages, as I described, going through the process of design, planning, and public approval. So, we should have about half of our portfolio of 3 to 4,000 units in construction and development, and about half that we are still in the planning stage.
Oh, wow. That's a lot. So what are your big goals for growth or operational efficiency?
It's a great question. For growth, we are really trying to solidify our financing relationships and to use kind of internal and closely held capital to grow the company more organically than maybe other real estate companies might consider. So we are using our debt relationships, internal capital, preferred equity to expand our capacity and to grow the company itself and to grow the underlying company value. And that's one of the goals of the company. And then what was the other question?
The growth or operational efficiency.
Yes. And operationally, it's interesting you ask. I know, Jeff, that part of your business is artificial intelligence and incorporating that into the real estate space. We have really become very active in using AI to help us to better um, narrate and um, guide our business. So narrate is the first part. So what are we doing? Well, we have to report on a monthly, depending on who the investor or lender is, monthly, quarterly, and annual basis. We have to update our financials. We have to update on the projects. We have to analyze the architectural progress. We have to describe and analyze our legal position when we are going before the city council. We have to, submit ordinances. Much of that I call the narration of our business. It's not the numbers, it's the words that tell the story of how we are progressing along. Much of that can be aided with AI. And so we are doing a better job of gathering all of this disparate information, all of these disparate reports, all of this correspondence that happens during the course of a month, a quarter, or a year, and then putting that into something that is discernible to a third party reader, investor, or lender. So AI has been hugely helpful in helping us to put all of that information into a funnel and produce something that can be digested. And the second way is to help us analytically to more quickly in the early stages of a transaction put our hands around the possibility of scope, scale, and cost. So if we can give AI some basic assumptions and give it where to direct the itself to gain source information, we can often get back a response that helps us to better frame the early underwriting prospects for a potential transaction. And when I started in the business, you'd have to go and get a research report, and you'd have to, do a market study, and you'd have to do all of these things, get maybe an appraisal before you would even consider meaningfully underwriting or paying close attention to a deal. Now, AI can help us to short circuit some of that by putting all of that early stage analysis at our fingertips to help us at least get a view of how the project might come out in terms of scope and scale well before we spend a lot of time, energy, and money on designs and underwriting and research.
Wow. No, I love hearing that using AI. That's great. So is there anything else you would like to discuss before we finish up?
No, I think this is a very helpful conversation, and thanks for your patience and let me try to figure out the technology when we first got on.
Oh, you're very welcome. Okay, well, that's all we have for this episode of Beyond the Blueprint. I want to thank our guest, um, Tawan Davis from Steinbridge Group, for his insight and expertise. It's been a real pleasure.
Thank you.
So,
Good talking to you, Jeff.
so where can our listeners find you and contact you if need be?
Sure. I'm on Instagram, Tawan WT Davis. I am on LinkedIn, Tawan Davis. And I think we have now we've got even a Twitter account at Tawan WT Davis. And we've got, what's the other one? TikTok, Tawan WT Davis. So I'm pretty easy to find, or Google or Steinbridge.com. It's all there. There's a bunch of stuff out there if you want to get a hold of us. And we're usually pretty responsive.
Perfect. Thank you.
All
So
right. Be
I'm your
well. Thank
host,
you so
Jeff
much.
O'Donnell, and we hope to catch you on the next one.
All right. Be well. Thank you.